Hey, we're going to get rolling here this week. It looks like everyone's out busy harvesting some areas of the southern corn belt, trying to push ahead and wrap up. And up north, guys are looking forward to this good weather. But as always, the market keeps on moving, and we just want to bring some quick few points to here today. And on these weekly webinars, it just really works well for us to get you a picture on what we see that's going out there. That over the last couple of weeks, we've had a couple of USDA reports. We had the stocks report at the end of September, and then we had the supply demand report last week. And when we start looking through the market news out there, it seems like everyone is just focusing on a detail here, a detail there, instead of taking a step back and looking at the big picture. And as producers and as market analysts, that's what we need to do. We need to take a step back and look at this big picture. What did the supply demand reports tell us? How do we move ahead? When we first look at corn in here right now, we got to look at these corn numbers as being pretty neutral. Okay, from that stocks report, we had our last year's carryout only increased slightly from 1.187 billion up to 1.236 billion bushels. And then on the October supply demand report last week, our new crop carryout jumped from 1.4 billion up to 1.5 billion. Yield, there was a very minor change in here. USDA only increased it up 0.2 of a bushel. So in the big picture in here, you have to view the corn side of it as pretty neutral. Neutral means probably $5, $5.50, maybe $4.75 to $6. Pick your poison in here. This is a very neutral report on corn. And what's just hard for people who strictly look at the corn market to consider in here right now is that corn is actual follower, not a leader. Now over to the soybean side of it, that's a decidedly bearish report. I mean, it's pretty simple, as that old crop carryout increased from 175 million up to 256 million as the 2020 crop got bigger. And then we looked at this year's supply demand tables, which we had with last week's October supply demand report. Our carryout went from 185 million up to 320 million bushels. We got the big jump in yield too of 0.9 of bushel an acre. What you need to keep in mind when you look ahead to that 21-22 carryout is it jumped 135 million bushels. That's a 73% increase in 1 month. You got to look at these bean numbers as a little more bearish. Now, from a bearish perspective, we're not saying that beans are heading down to $10 a bushel, but if we do bounce in here, this bean market is going to struggle in here. If we got to move higher, probably got to get led by corn or wheat, and that beans would be the one that follows us. Now, we just went through the bearish side in soybeans. A decidedly bullish report was wheat. Our carryout dropped from 615 million down to 580 million bushels on this October supply demand report, and world carryout dropped 6 million metric ton as well. The world wheat crop is getting a little bit smaller, and we have some stronger demand in here. There is a bullish catalyst on the wheat side of it. So taking a step back, the bears have beans, the bulls have wheat, and anyone can argue on the corn market. Now, as we wrap up harvest, or I shouldn't say wrap up harvest, as we push past the 50% level in the harvest right now on the corn side of it, there's a lot of discussions in here. Do we have a harvest low in place? Well, if we are going to see a harvest low in place, we need to get led by demand. And as we have in the slide in front of us right now, as we've got world corn offers on the spot market, as you can see out of the U.S. Gulf, corn is $6.79. Out of the Pacific Northwest, it's $6.86. Currently, corn out of Romania is $6.91. Ukraine is $6.95. And so we are competitive with corn out of Eastern Europe. The Argentina corn, we have that spot price in there at $6.12 a bushel, which is accurate. But you need to remember, Argentina is coming up to the tail end of its export program in here right now. Their offers should be running out in here in the next couple of weeks. To summarize this, U.S. corn is very competitive on the world market, and if we're going to push higher, it needs to be led by demand. The thing to keep in mind right now on corn, and I am looking at some notes, is on a year-to-date basis, we've sold 953 million bushels of corn. That's up 87 million bushels from a year ago. Yet the USDA is saying annual exports are going to be down 253 million bushels. This tells us that we need to be competitive on the corn market. We need to export some corn, but we don't nearly need to be at the pace we were at a year ago to meet these current USDA projections. Again, on the corn side of it, there's a little bit of a bullish, a little bit of a bearish argument there. When I get over to the bean side of it, as you can see with our spot bids, the U.S. Gulf is around 1350. Out of the Pacific Northwest, it's at 1380. Brazil's at 1410. Argentina's at 1464. Who's ever buying beans on the world market, they're coming to us. They're coming to us solely based off of price. Now, what we got to be concerned with on beans, though, is when we look ahead to where offers are at for February, March timeframe. And we pick that point out as you're seeing new crop Brazil beans available the last half of February, let's call it the March timeframe. Well, when we fast forward out that far, U.S. Gulf beans are offered again right around 1350. New crop Brazil is down at 13 bucks. So as we look ahead in here right now, we've got an export window over the next couple of weeks, over the next month or two. But that export window is going to quickly close in here on U.S. soybeans unless there's a major crop issue in South America. Keep this in mind on soybeans. On a year-to-date basis, we sold 836 million. A year ago at this time was 1.257 billion. We're down 421 million bushels, yet the USDA is saying our exports only going to be down 175. The export pace on beans is a concern. As we flip over to the wheat side of it, here in the spot market, U.S. soft red winter wheat's at 875, hard red winter wheat's at 946. You can see wheat out of Europe, out of Russia is anywhere in between the 850 to 890 range. U.S. wheat isn't quite the cheapest in here, but we're not out of the ballpark in here on prices. We can see some decent sales. When we look over on the inflation markets, we've talked about energies before. One thing we want to bring up here is these are daily pork cutout values and daily box beef values. And the red line on both of them is 2021. The green line is 2020, and the blue line is 2019. The pork side is off to the left. And what we notice here is we got pork cutout values on a downtrend. And really, this is about the first time in the last 6 months that pork cutout values are cheaper today than they were a year ago. So when you look over at the pork side of it right now, there's really not that argument for inflation there on the pork. As we get over to the beef side of it, we've had beef prices exceptionally strong here over the last 6 months. We are trending lower, but well above what it was a year ago. So you can make an inflation argument over on the beef side of it, but not so much as pork, where beef probably finds a little more support longer term with the declining supplies that are going to be coming up as we look ahead into 2022. You can make the same argument on the hog side of it with some declining supplies, but as we push ahead over the next 3-4 months, the slaughter levels should increase. We just like to point out the product value standpoint on an inflation bet. When you look at the big inflation markets out there, you've got crude oil. What we have here in the top chart is weekly crude oil. As you see, it traded above the 2018 high. We're at the highest level in 7 years on crude oil. And on the bottom chart, we got the November crude oil futures contract, which just made new contract highs again here this week. The momentum is still higher. Over on the natural gas side of it, you could see we went through the 2018 high around $5 and then ran up to the 2014 high of $6.50 on the weekly natural gas chart up on top. Where we need to be a little bit cautious with natural gas, though, is just this week, prices have turned a little bit lower. And as you can see, we're targeting key 40 and 50-day moving averages, which is the purple and blue lines on the bottom chart. If those are violated this week, the trend on that will be turning lower. When we get over to the wheat side of it, the leader in wheat has been EU wheat futures. As you can see here, front month EU wheat futures is targeting the summer high, which is also the high back in 2010, 2012, around this 280 a ton level. If we break above there, 295 is the next target, which is in 2008. Minneapolis wheat is trading near those 2012 highs, but KC wheat is much below it, as we're showing on the bottom chart here. So if you want to make a bullish bet on the wheat side of it, it probably should be over on the KC wheat, saying it should pick up relative to where both Minneapolis wheat is at and EU futures. Now to wrap this thing up, you got a big debate out there. Harvest lows really in place. If we have them, it needs to be a demand-led rally. We don't see the demand-led rally in soybeans. It can occur over on the corn and wheat side of it. Inflation is the hot topic out there. When crude's up, you typically have a rally over on the corn market. You got to follow the world markets in here, whether it's world futures markets or it's world cash markets in here, but it's a must to follow the markets. How big is the U.S. crop? We think this corn crop maybe could get a bushel or two bigger. Beans, call it steady to a half bushel up. And then looking ahead to 2022, a common thing we hear is the markets need to buy acres. And we don't deny that when you look at wheat or corn. But on the bean side of it, when you have carryout levels jumping in here right now, we actually need to discourage acres on the soybean side of it. So if you are going to be increasing your bean acres this next year, we would look at getting some price coverage in place. Again, go to our YouTube channel, like that. If you have any questions or concerns, drop us an email or give us a call. Have a great day.